Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 127 on August the 15th, 2020. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Aldeyra Therapeutics, Citigroup, and Micron Technology. And we discuss three new trades on American Eagle Outfitters, the Spider S&P Oil and Gas Exploration and Production ETF, and TripAdvisor. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets were up once more this week. The Dow Jones Industrial Average gained 497 points, ending the week at 27,931 points. The S&P 500 index grew 21 points this week, closing at 3,372 points. Now it's time for the topic of the week. And the topic this week is more psychological in nature, but it is, trust me, it is still very, very important. So someone recently asked me, what is the hardest thing about trading? Now, most people would expect it to be something along the lines of, finding the right trading strategy to trade, or you might even think it's, taking a big loss, which, don't get me wrong, taking a loss doesn't get any easier. It sucks. Now, some of you might think the hardest part of trading is knowing enough to make the right decision. And that's a little closer. That mentality will likely lead to what we call paralysis by analysis. That's when you feel the need to perfectly analyze every trade so much that you rarely ever get to make the trade. In fact, you might do so much analysis that the opportunity leaves, meaning you missed the trade, someone else took it. So the thing that I think is actually the most difficult in trading is simply making the trades. Now, lots of people talk about trading. Lots of people are fine, do very well paper trading or planning the trade. They'll mark up the price graphs and convince themselves that they are going to be trading millionaires, right? Like, I'm going to be rich. It all looks so intuitive to them, right? None of these things equal making a trade. So the hardest part of trading, in my opinion, is actually pulling the trigger on making the trade. It's hitting the go button, the button that actually sends the order from your computer to your brokerage to be executed. So once you start trading, you can then start perfecting your strategy. Once you start trading, you can observe your mentality and psychology around trading. So many people are just sitting in the starting blocks, ready to go, getting ready, but never really taking off. Be willing to make a trade and start learning the markets and yourself. Yes, do the research. Yes, paper trade. But let all of those things lead to money-making decisions by you. That's when you'll truly start learning about trading. That's when you'll start moving towards your trading goals. Many of us allow fear to control us, right? We all have a fear about losing our hard-earned money and, just losing in general. And trust me, I'm human. I totally understand. I remember years and years ago when I took the GMAT to apply to graduate school. The test itself was way harder than what I expected. Because the test is electronic, it constantly tries to give you harder and harder questions to push the limits of your intelligence. And after taking this brutal test for 3 hours or so, it gives you the question, it asks if you want to submit the test for grading or if you want to cancel it. I strongly considered canceling it. I thought I had done a horrible job. The test was really hard. Well, thankfully I didn't cancel it because I ended up scoring very high. So high that the lady overseeing the exams came out when she handed me my test scores and said that was the highest score she'd seen all week. And this was in downtown Chicago. I almost didn't submit the score. And I think about this when trading. Like, you've done the work, you've done the analysis. The only way to actually make money from all your efforts is to hit the go button. And that's why I say pulling the trigger is actually the hardest part of trading. And if you guys think it's something different, feel free to email me. I'd love to hear your opinions. But I've talked to a few guys around me who I know have been trading for, decades, and they all agree. But once you get used to pulling the trigger, you can move on to other things. But if you don't start pulling the trigger, if you don't start hitting the go button on your trades, you'll see how difficult it actually becomes for moving forward. So that's it for the topic of the week. I wanted to dive into the trade review from last week. We always start off with the covered call. We're looking at Aldeyra Therapeutics, symbol A as in Alpha, L as in Lima, D as in Delta, X as in X-ray. When we looked at the trade, the stock was trading for $7.13 per share. I looked at buying stock and selling that August 7.5 call at 45 cents, which could give us a maximum return of 11.5% in 2 weeks. Well, Aldeyra Therapeutics stock fell 51 cents this week, ending the week at $6.62 per share. The call option we sold lost 20 cents, leaving us with a net loss of 31 cents per share on this trade. Now, with the limited amount of time left to make adjustments for August, and I mentioned this last week for these trades, I would actually just look at closing the trade and taking the 31 cent loss. I really like to keep my monthly trades within the selected expiration month. Now, sure, you could roll the trade, you could roll the call to the new expiration month. After all, the September 7.5 call has a 65 cent bid on it right now. That would offset the loss for this trade. It would also extend this trade out another month, and it requires new analysis of the stock to make sure that the trade still is as desirable as it was when you first looked at it. So overall, I'm more likely to close the trade and start fresh with a new trade for the new month. Now, our next trade was a credit spread. We looked at Citigroup, symbol C as in Charlie. The stock, when we looked at it, was $52.12. We looked at selling the August 51.5 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Well, Citigroup stock grew 81 cents per share this week, closing the week at $52.93 per share. The out-of-the-money put spread we sold is even more out of the money now. Now, you could pay 17 cents per spread to close this trade by selling the bid price of the spread. This would actually give you a 1 cent loss per spread, which doesn't make any sense because we know that as long as this spread remains out of the money, we will keep the full amount of money that we received when we sold the spread. We are $1.09 per share away from our break-even price. So no adjustments are needed on this trade. This trade is working out exactly as planned. And with August expiration being Friday, I fully expect this trade to finish out of the money, which would mean that we get to keep the 16 cents that we collected when we sold the spread. Our final trade for review is the debit spread we put on last week on Micron Technology, symbol M as in Mike, U as in uniform. When we looked at this trade, the stock was trading for $48.75 per share. We looked at buying the August 49 put spread, paying 32 cents per spread, which could give us a maximum gain of 18 cents or 56.25% return in 2 weeks. Well, Micron Technology stock fell $3.15 this week, closing at $45.60 per share. The in-the-money put spread we bought is now even more in the money. You could actually sell the spread back right now for 35 cents, which would give you a gain of 3 cents on the week. However, we know with stock staying in this region at expiration, and expiration's only 5 business days from now, we will expect this spread to finish being worth 50 cents, which will give us an 18 cents gain per spread. That's our 56.25% return on capital for a 2-week trade. So no adjustments needed at this time. definitely, if you got into this trade and you've won, don't walk away for 3 cents. Hold it for a few more days, get your 18 cents. Definitely be aware of your break-even prices on all of these. But with us so deep in the money right now, it makes no sense to get rid of this spread. It's working. You'll make your 50 cents per spread, which means an 18 cents profit per spread. So good trade. Two out of 3 for the week. I'll take it. So just before we get into the new trades for the week, just a reminder that we are entering expiration week for August expiration. So just be vigilant, make sure that your August trades are all doing what you're expecting them to do as far as making or losing money. Just stay on top of it. And for this week and going forward for the next 4 weeks, we will be trading September options expiration, expiry on these trades. So we'll start off as usual with the covered call. This week I'm looking at a retailer, American Eagle Outfitters, symbol A as in Alpha, E as in Echo, O as in Oscar. The stock ended the week trading for $11.68 per share. I'm looking at buying stock and selling the September 12 call at 95 cents, which could give us a return of 10.87% in 5 weeks. Now you enter this trade by buying American Eagle stock for $11.68 per share and selling the September 12 call at 95 cents. This trade makes the most money if stock prices finish above $12 per share, and the break-even price on this trade is $10.73 per share. In real terms, the stock purchase would require $1,168, and then you would collect $95 for selling the option. Our second trade on the week is a credit spread. We're looking at the S&P Oil and Gas Exploration and Production ETF, symbol XOP, X is in X-ray, O is in Oscar, P is in Papa. Stock ended the week at $56.16 per share, and I'm looking at selling the September 56.55 put spread at 35 cents, which could give us a maximum possible loss of 65 cents per spread. Now you enter this trade by selling the September 56 put at $2.89 and concurrently buying the September 55 put for $2.54. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices finish above $56 per share. The break-even price on this trade is $55.65 per share. Now in real terms, you would receive $35 per spread that you sell, and you'd have $65 at risk. And then our final trade for this upcoming week is a debit spread, looking at TripAdvisor, symbol TRIP, T as in Tango, R as in Romeo, I as in India, P as in Papa. The stock ended the week at $22.29 per share, and I'm looking at buying the September 21-22 call spread, paying 68 cents, which gives us a maximum return of 32 cents or a 47% return in the 5 weeks that this will have before expiration. Now you enter this trade by buying the September 21 call for $2.40 and concurrently selling the September 22 call at $1.72. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $22 per share. The break-even price on this trade is $21.68, and in real terms, you'll pay $68 to enter this spread, and your maximum gain is $32 per spread. So that's it for the trades this week. Thank you guys for listening. I hope you're enjoying these last few weeks of summer. Summer is trailing off, coming to a close. We are right around the corner from Memorial Day. Now, I live in Texas, which means that my warm days will continue for a while. In fact, some of the best golfing weather in Texas happens in October and November. So life is good down here. I hope life is good where you are. Have a great week, and as usual, happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.